Good morning, FinMonkeys listeners. I'm Noah Mercer, and you're tuned in to the FinMonkeys Morning Brief. We've got a busy day ahead, so let's jump right in. First up, U.S. equities are feeling the squeeze from rising Treasury yields and climbing oil prices, nudging investors toward the dollar. That matters because a stronger greenback can bite corporate earnings and import costs. Next, a leading CIO says the AI rally is finally backed by solid earnings and productivity gains, a reminder that the hype is turning into real profit, which could reshape portfolio choices. The anchor move today is the dollar's advance, driven by Treasury yields edging higher and oil prices climbing out of the trough we saw last week. That dynamic is pulling U.S. stocks lower, especially those that are sensitive to currency swings. At the same time, the AI story is providing a counterweight. Earnings reports from the tech frontier are showing real productivity improvements, not just hype. Put together, you've got a market that's weighing the cost of higher rates against the promise. Austan Goolsbee weighed in, pointing out that if AI-driven productivity and higher oil costs stay on the rise, central banks may feel compelled to tighten policy faster than expected. That's a big deal because any move to raise rates will ripple through borrowing costs worldwide, from mortgages to corporate financing. Meanwhile, the friction with Iran is already pushing oil higher and lifting bond yields, a combo that's dragging Asian equities lower. Those regions, heavily reliant on export dry trade, adding another layer. Washington just announced sanctions on the Hormuz Authority that oversees the strategic Strait of Hormuz. That move adds fresh pressure to an already volatile oil market, potentially tightening global oil flows and stoking price volatility. When the Hormuz corridor is disrupted, it reverberates through every energy-dependent economy, from the Gulf to the East, and can quickly become a catalyst for broader market risk. That's the FinMonkeys Morning Brief for today. The next thing to watch is Fed statements on rates and any further Middle East developments. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.